Private resale property prices down 2% on low volume. Rental prices down 1%. Next on XTV with your hosts, Mark Loon and Angela Doe.
Good day, I'm Mark Loon.
Hi everyone, I'm Angela To. Welcome to the Private Resale Report on XTV.
On today's program, we'll break down February's numbers for Singapore's private property resale market. Thereafter, we'll look at the SRX Analyzer Property Tracker and have a look at where transactions are occurring these days. But first, for the headlines. Angela?
Thanks Mark. At the top of the news, according to the SRX Property Resale Index, overall resale prices of no-landed private residential units declined 2% in February. Prices registered 175.1 on the index. This is down from 178.7 in January. This decline in the SRX Property Index comes after two consecutive gains in December and January. Transaction volume continues to decline on a month-by-month basis. SRX estimates 242 non-landed private homes were resold in February. This is an 18.5% decline from January's 297 resale transactions. Now for more analysis on the private non-landed resale market, we turn to Mark.
Thanks, Angela. I'm with Sam Baker, CEO of the Singapore Real Estate Exchange. Welcome back to XTV, Sam.
Thanks Mark, it's great to be here.
So, what I hear is volume is down, but prices continue to fluctuate. So, what's happening, Sam?
Well, the market's in a kind of a purgatory. It's not where it wants to be, yet at the same time, it's not where policymakers want it to be. Policymakers that are concerned with both income and also low interest rates. If we look at the cooling measures graph in the resources section of srx.com.sg, we see that the government's cooling measures have been very successful in cutting off the demand side of the supply and demand equation. Note, Mark, that this is a very technical graph. There have been many cooling measures. So those who are interested in finding out more details, they can go to the resource section of srx.com.sg. However, we can summarize all these measures into two primary buckets. The first one are the measures designed to dampen overseas demand. The government did this by levying stamp duty taxes. This diverted overseas money away from Singapore. This money went to other international cities, primarily New York, London, and Hong Kong.
Let me interrupt for a second. So Sam, it's worth noting that along with Singapore, Hong Kong, New York, as well as London, are the big four international property markets with strong property rights. They are often the target markets for overseas investors, aren't they?
Correct, and it's worth noting that in the case of Hong Kong, they actually followed the lead of the Singapore government and imposed their own cooling measures.
Oh, so you're saying one way the government squeezed demand was to implement stamp duties for overseas investors?
Right, so that was the first bucket. And the second bucket is to focus on the financial side. So if you think about Singaporeans, they're pretty savvy when it comes to investing in property. And they recognize that with the low interest rate environment, that the cost of capital for purchasing these homes was much less than it has been in the past. So it made rational sense for them to borrow from the banks and then to purchase maybe second or third homes for investment purposes. The government recognized that this was a problem. Prices were not coming down sufficiently, and even volume was not coming down sufficiently. So what they did was they imposed a number of cooling measures that were directed at constraining the ability of people to be able to get loans from banks or to finance their purchases. This did the trick and has actually slowed the prices of the market.
Okay, so let's put up the SRX price index again and have you talk us through it.
Okay. Mark, I really like this enlargement of the SRX price index because you can really see the struggle that is taking place on the price side. For the last 15 months, the SRX price index for non-landed resale properties is bouncing between the 170 and the 180 band. Prices have been unable to break through that 180 ceiling. Yet at the same time, prices are resisting the pressure from the cooling measures to fall below the 170 support level.
So Sam, I was reading in the news somewhere in mid-February that the Chief Executive Officer of DBS Bank mentioned that he was expecting property prices to fall between 10 to 15%. However, in other property news, I also saw that property analysts were only expecting 5 to 10% decline. So what is SRX's view on this?
Well, SRX does not have a house view. The reason is it's our job to collect information, process it, and disseminate it to property analysts, real estate professionals, and the executives of institutions. However, my view is that 10 to 15% that the DBS chief was mentioning is more of a target for policymakers who are interested in bringing down housing prices so that household income will catch up to the increase in price.
Right. So how do we get there if the market does not want to fall below the support level of 170?
Well, that's the interesting challenge, isn't it?
It is.
As you know, my view is that the market is constantly looking for the fundamental price of the market based on real signals such as real supply, real demand, and also the cost of capital. Cooling measures, on the other hand, and even external economic shocks like the global financial recession are not going to alter the fundamentals of the market.
Okay, so what alters these fundamentals of the market?
As I mentioned, real supply, real demand, and the cost of capital. So the example of real supply would be an increase in the number of units coming on because of new projects coming into the market. Or an example of real demand would be an increase in the population. Okay, these are going to fundamentally alter the market. So to answer your question, what do I think will bring down the prices? It's going to be when real supply kicks in.
Okay, I think we have a graph for that.
Great, there it is. It looks like over the next 3 years, Singapore should see many more units coming on the market, especially when we compare them with past years. Based on our analysis of URA data, over 17,500 units are expected to be completed this year. That number jumps to over 27,300 units in 2016. If you look at the last 18 years, on average, there's been about 10,000 units completed each year. So 27,300 units represents a significant jump. In fact, it's about a 173% increase over the average yearly completion rate. We'll post this graph in the research section of srx.com.sg for those who are interested. Wow, Mark, the projected increase in supply is really quite dramatic. I guess anybody can see that who's traveling around Singapore and seeing all the developments going up. What we actually do on srx.com.sg is we consolidate all the new launches, all the new developments that are coming out in one convenient location.
That I know. I'm going to put it up on the screen, Sam.
Okay?
Just go to srx.com.sg and the section called New Project Launches. There you will find a map displaying all the launches. There are currently 17,429 new launch units.
We should note that those units have different status: available, reserved, and sold. srx.com.sg is linked directly to the SRX enterprise, and consumers can link with those agents transacting in a particular new project. The marketing estate agents use SRX enterprise to update the status of unit availability, market, and co-broke the project.
Yes, and the consumer can browse through the new launches by new releases, upcoming launches, current launches, and past launches. XTV will examine new launches in great detail on a program airing 31st of March. So Sam, when can we expect prices to come down because of supply?
Well, the trick for the government is to manage what's called a soft landing so that prices don't fall too much, undermining the asset value of the homes.
So what do buyers do? Do they wait?
Well, my view is that as long as you stay within your budget and you negotiate, it's a buyer's market, so you have negotiating power. If you believe in Singapore property, you're within your budget, and you bring the prices down through negotiation, then you have built yourself what's called a margin of safety to weather the price decline that the DBS chief mentioned. That way you'll be in a position of having bought near the low end of this real estate cycle.
Okay, thanks Sam. So now back to Angela for more news.
In other news, rental prices softened by 1% in February. All three regions contributed to the drop in price. The rest of the central region led the way with a decline of 1.9%. Rents in the core central region posted a small drop of 0.6%, while outside core region declined 1.3%. SRX projects that private rental volume in February will be about on par with the last 4 months, finishing above 2,400 units once all the contracts have cleared. This will mark off growth of about 19% increase from February 2013. Next week, we will publish an in-depth analysis of the Singapore private rental market on srx.com.sg. Please look for it. Now, let's turn to Mark with the final segment of the program.
Thanks, Angela. I'm now here with Linus Loh, Head of Client Training and Product Manager for the SRX Analyzer. Welcome to XTV, Linus.
Thanks for having me.
So, Linus, you spend a lot of time with real estate professionals, and given today's cooling measures, are you able to share with us where the hot spots are?
Definitely. There are still plenty of transactions. Agents are focused on resale, new launch sales, rentals, overseas projects, and commercial. Today, since the subject is the resale market, I thought it might be fun to check out the property tracker on the SRX Analyzer.
Oh, so what is this SRX Analyzer?
Powerful. We like to think of it like a Bloomberg terminal for Singapore real estate. It allows us to analyze the market at the macro level, conduct project level and unit level analysis, and track the performance of all the projects in the market.
So, who uses this machine?
Only a selected group of elite real estate agents, property analysts, academics, and private and public institutions.
And what is it that you want to show us using the SRX Analyzer?
Well, since today's program is about the resale market, let's look at which projects that have experienced the most transactions since the price index crossed the 170 mark.
So, that's 15 months.
Exactly. So I'll go to the property tracker in the SRX Analyzer and select the sales transaction. I'll put them in the last 15 months. I can filter what I'm searching for by the parameters you see on the screen. But to keep it simple, I'll just press the Generate button.
Wow! That was fast!
Almost instantaneous. So since I'm interested in volume, I reorder the list of projects by selecting volume. So you can see the top 3 selling projects are relatively new condos. The Delinan at 826 transactions, the Nest at 775 units, and the Buckley Reach in third at slightly over 700 units.
So that's all the transaction activities for the past 15 months in a flash.
Flashed.
So Linus, what about the upcoming weeks ahead?
Well, Mark, we can measure activity by the number of listings, and most of the listing portals, including srx.com.sg, have more than 100,000 public listings. But we prefer to measure the activity within SRX Circles, which is an agent-only co-broking multiple listing system. We call it MLS, and it gives us better indication of which listings are likely to move since most transactions involve a buyer and a seller agent operating on SRX Enterprise. As you would expect, over 80% of the actions will be in condos. In terms of location, the top 5 verified sale listings belongs to the following districts: 10, 19, 15, 9, and 23.
Thanks for that, Linus.
My pleasure.
Back to you, Angela.
And that concludes today's show. Thank you for watching XTV, and please join us next Monday when we explore how technology is changing the way we search for homes. Thank you and have a great week.